In May 2025, around 45.8 million people were employed in Germany. That number has not really changed since December 2024. It's flat. In fact, compared to April employment, only 1,000 employments were generated. That's 0.0%. No growth. But here's the twist. While employment stagnates, unemployment is on the rise. Compared to May 2024, the number of unemployed people has increased by 94,000. That puts the unemployment rate at 3.8%, which was 3.6% last year, the same month. And there's more. The number of job vacancies has fallen drastically. In 2022, there were around 2 million open positions. By the third quarter of 2024, that number dropped to just 1.3 million. So, fewer job opportunities, more people unemployed. That's not a good combination. But what's driving this? Let's have a look deeper. Despite having one of the highest employment rates among OECD countries, Germany is now clearly feeling the weight of economic weakness. Long term unemployment is up, especially for people without formal qualifications. And at the same time, skilled labor shortages are getting worse. It's a paradox. Too many people cannot find work, while companies cannot find people with the right skills. Researchers from the Institute of Employment Research explain that this is not just a temporary slump, it's a part of a bigger transformation. Germany's workforce is aging. The demographic shift is in full swing. In fact, most of the employment growth in recent years has come from people with a migration background. At the same time, part-time jobs are becoming more common and total hours worked per person are shrinking. And let's talk about productivity, the engine of long-term growth. In Germany, productivity per worker has been stagnant since 2017. That's before the pandemic. Productivity per hour worked kept rising for a while, thanks to short-time work program like Kurzarbeit. But now, even that is declining. Why is productivity stuck? One reason: Germany has not invested enough in digital transformation. While some high performing companies have made big digital strides, many others are falling behind. And that gap is growing. Another reason: the shift in employment toward low productivity sectors like healthcare, education, and care services. All important, but all with slower productivity growth. Meanwhile, manufacturing, the traditional powerhouse of the German economy, is stagnating. Industries like automotive, metalworking, and machinery are seeing falling production and flat employment. Exports are down, energy prices are up, and competition from countries like China is heating up. Despite all this, the demand for skilled worker remains high. In 2023, 42% of skilled positions went unfilled. That number is even higher in construction and hospitality. Smaller companies, especially, are struggling to hire. So, what's the real issue? Germany is undergoing a double transformation: digitalization and decarbonization. These changes are reshaping the economy and the job market. Some jobs are disappearing, others are evolving, and entirely new roles are emerging. Tasks that can be automated are at risk, especially in low skill jobs. By 2022, over half of all tasks in semi skilled jobs could be replaced by technology. But now, even complex roles are seeing rising automation potential. But here's the good news: these technologies can also create new opportunities if we invest in training. And that's where the real problem lies. Training is falling behind. Both company provided training and the German apprenticeship system are still below pre COVID levels. In fact, the number of new apprenticeships has been under 500,000 per year since 2020. That's a serious decline. Even worse, Education outcomes are slipping too. PISA test scores are down. More young people are leaving school without a degree. So while we need more skills, we are doing less to build them. What does all this mean? Germany is at a crossroads. The labor market is not collapsing, but it's under pressure. If the country does not invest heavily in education, training, and worker mobility, it risks falling behind. To reverse the trend, experts are calling for more digital and green skill development, stronger investment in vocational training and apprenticeships, greater support for relocation, helping workers move to higher productive sectors, and increased public and private investment in innovation and infrastructure. Germany still has the capacity to lead in the global economy, but it needs to embrace the transformation fully, not just manage it slowly. Because without bold action, the job market of tomorrow may leave too many people and too many businesses behind.